Okay, well, it's a little bit of a scramble, but it's a good thing I'm up here with old friends, and so happy to jump in on this panel, which I think is such a well-timed panel because of all the capital that's flowing in the region. We're going to talk about new deals, etc. I think it's Julie Ruvolo started the day. Is Julie still here? Hi, Julie.
Hey, Andy.
So, the LAFCA numbers for 2018 had venture doubling in the region to $2 billion. And we already know through this year, and Julie, do you have an actual number at this point to how much is funded through the year? Well, one of the benefits at SVB being the bank to a lot of the entrepreneurs in the system is we see the money coming into the bank. And so we have a pretty good sense. You just add up the various press releases that we're well over $2 billion already for this year. So we're on pace for another great year in Latin America. So we're going to talk a bit about sort of the capital and the capital influx into the region and some of the exciting deals that the esteemed panelists are working on. So why don't we get started? And I'll ask each of you to introduce yourselves and your firms. Saurabh, if you can get us going.
Hi. Hi, I'm Saurabh Gupta. I'm one of the 5 partners at a firm called DST Global. We started about 10 years ago to invest in internet and technology companies globally. In the last 10 years, we invested about $10 billion in companies like Facebook, Twitter, Airbnb in US, companies like Alibaba, DiDi, Xiaomi in China, India, Europe, and most importantly, companies like Nubank and Rappi in Latin America. I'm based here in the Bay Area. I help lead our efforts in US and Latin America.
Hi, good afternoon. Good afternoon, everyone. I think I got the easier job now because I'm the only one in the panel that knows the questions. Yeah, the only thing is I have to get them to Andy somehow. I was going to interview these 2 guys, so no, but it's going to be a real honor to be here. Fantastic audience today. I think the event so far has been really, really good. I'm managing partner and co-founder of Redpoint Eventures in Brazil. I mentioned briefly before. We do early stage investing in the region. Personally, I'm investing in the region as a venture capitalist since 2003. So it has been a long ride. I think you are about the same time frame, if not more. But I think we're going to be blessed today with a lot of different perspectives here. So thank you, Andy.
Hi, my name is Alexandre Villela, Managing Director for Qualcomm Ventures, in charge of Latin American investments and also networking and communications deals here in the US. Qualcomm Ventures is a very active corporate venture capital firm, so basically we are part of a large technology organization. For those that are not familiar with technology, Qualcomm is a public company, market cap north of $100 billion. We are in the region since 2012. I think we are super active in the region. We have investments around IoT, robotics. We recently announced a fund for artificial intelligence here in US, networking, communications. What else? I think I mentioned IoT, right? So, and in the last 18 months, I think we had a phenomenal ride. I mean, we had 6 companies in our portfolio that had exits above $1 billion. So 2 companies here in US, one of them being Zoom, which is a recent IPO, very successful company. 1 company in Brazil, 99, of course. 2 companies in China, Mobike and Xiaomi. So, and we are super excited about the prospects of Latin America and also Brazil.
So maybe I can start the conversation with Alexandre and Anderson being sort of really almost in the pioneering group of investors in this current iteration of venture in Brazil. Alexandre with his work with Carlos Cochrane in the Intel Capital days, and Anderson, of course, with Naspers, and Buscapay, et cetera, and now Redpoint Eventures. So what's your view in terms of, sort of borrowing Julie's question a little bit, we see all this capital coming in, particularly at growth stage companies today. Saurabh mentioned 2 of those, but there are many more on the list. What's changed? What do you guys see as veterans in the industry in Brazil that's driving the attraction of new and big chunks of capital into the market?
Okay, so I think the biggest change was actually highlighted pretty well by Edson Rigonati and Manuel earlier today. I think the building blocks, the foundations for this new phase were laid throughout the last 10, 15 years, especially since 2011, 12 to now. I think a very interesting characteristic that we are seeing at least is the amount of capital that is coming now is, as we saw here, manifold what we were seeing before, and yet we are not seeing the same kind of, how to put it in a polite way, craziness that we were seeing in 2012 and 13. So it's a lot more capital, but I think the ground to absorb this capital is 10 times better than what we had before. And I don't think this happened for free or easily. It has been a lot of groundwork being done for the last few years. If we look at the ecosystem, the characteristics that we would need for great entrepreneurs to build huge companies, it's for the first time that we have all the ingredients. I think all of them can improve, including availability of capital. But I think now there is no excuse, there is nothing missing. We have good examples, we have good outcomes already. So I think the capital, different from 2012, 2013, that we started to see anomalies in the market. There are rounds that we might question because there is no track record, but the consequence in the market is very, very positive. So I think it's a great sign in my view.
So in part of what you're saying, Anderson, there is the sort of the valuation today, even though they're much higher than we're talking, compared to that 2012 era, which is sort of, widely seen as kind of the peak of the last cycle in Brazil. But the financial underpinnings of these companies really do, to some degree, justify these higher valuations and attracting more capital.
Yeah, pretty much. I wouldn't go as far as to say that they fully justify, because it's unknown even here, right, in Silicon Valley, that has the longest history and tradition doing that. But definitely, if you look specifically at valuation, the valuations today are still lower to the vast majority than they were in 2012 in dollar terms, in our space, Series A, Series B. There are outliers, there are more now because we have more volume, but the expectation of valuation is completely different. If in 2012, if we were to say, we expect to have like 2 unicorns in Brazil in the next 6-7 years, we would be labeled crazy completely. Other than, I think, Fabricio, that was already saying that back in the day, nobody was, us included, right? We would probably say, we have our fund strategy, we are not underwriting unicorns nor IPOs, we're going to give a good result without that. Now we have 8 publicly stated, probably 10, 12 already unicorns on the ground. So the expectation of valuation definitely multiplied. And for the record, some of the companies are raising at 10 billion. So the expectations of the investors investing in these rounds is that these companies will be 3, 4, 5 times bigger, at least. So the expectation of the potential value of a company being created in the region is completely different from merely 3, 5 years ago.
And we've never had this many companies at scale either, right? Like the number of companies.
Absolutely.
Yeah, so perhaps I mean, I'm completely 100% with my friend Anderson. So just to add a few points, right? So I also completely agree, right? I mean, at this point in time, we see that underlying economics for many of those companies is phenomenal. You see companies that are growing very fast, hyperscale companies with very strong management teams. When we look at the ecosystem, kind of in high level, we see that on the supply side, I mean, last year Brazil attracted roughly $1.4 billion in investments. I'm sure that this number this year is going to be much higher than that. So if we look at the VC investment per capita in Brazil, we are talking about maybe $7, $8 give or take, which is similar to India. But if you compare that to China, for instance, China is around $49. If you compare that to US is $130, $140 per capita. And of course, the best example is Israel, right? So, which is above $200. So I think there is plenty of space to grow on the supply side of the things. Of course, on the demand side of things, I mean, I started working in venture capital in 2008. I mean, the biggest difference I see from that time to today is that right now there is a generation of very talented entrepreneurs. Many of them were trained here in the Silicon Valley. They decided to come back to Brazil to have their first experience, as an entrepreneurs. And of course, we also see, I mean, we can tell that by our portfolio. We have also, the companies are attracting enough to attract people from talents from other countries to work in companies that are based in Brazil. I mean, there is a big opportunity. So I see from, both on the supply side and demand side, very good signals, and I still think that there is plenty of space to grow.
All right, maybe we can get Sarb's perspective, being the relatively recent entrant into Brazil and Latin America. Nubank and Logi, terrific growth stories, both companies. Rappi, sorry, my apologies, Rappi. And from your view, or DST's view, what was it that, obviously they're both hyper-growth companies, but when DST looked in the region, take us through that sort of analysis and how you got comfortable and decided to make those investments.
Sure, absolutely. So, first of all, I feel relatively new to Anderson and Alexandre, but we have had connection with Latin America for about 10 years now. Marcos from MercadoLibre used to be on the board of my partner Yuri's company about 10 years ago. I was investing in Stone about like 7 or 8 years ago. And then we first invested in Rappi back in 2016. Our first investment in Nubank was in 2016. But relative to, of course, you guys, we are still new entrants in Brazil and Latin America. With that, let me try and answer your question. So, from our perspective, there are a few things which are very interesting about Latin America and, as a result, Brazil. First of all, it's, of course, a very large market. Like on the macro perspective, 2x the population of US, the third largest internet market globally, about 400 million internet users, large GDP, 2x the GDP of India, about $5 trillion, very attractive market with high GDP per capita, same as China, $10,000, and a relatively unified market. So unlike India, where internet companies have to deal with 25 different languages, unlike Europe, where they have to deal with roughly 25 different languages, Latin America is a relatively unified market. You're primarily dealing with 2 languages. There is precedence that you can build large regional players. Of course, MercadoLibre is a good precedence. Rappi and Nubank hopefully will be the next precedents. So attractive market. low e-commerce penetration, which creates an opportunity from our perspective. But the biggest factor, which I think is very interesting about Latin America, is the contribution to global GDP versus the contribution to global internet market cap. So Latin America, with about $5 trillion of GDP, is roughly 6%, a little bit over 6% of global GDP, while the Latin American internet market cap is roughly 1% of global internet market cap. And it's not because the market is not there. Brazil, for example, is the top 5 market for Facebook, Google, WhatsApp, Netflix, Uber, and a bunch of other companies which I'm probably missing. So the market is there. It's just that the market cap that the market can support has not really been captured to the fullest yet, and that's where I see the opportunity.
Well, I've heard a similar sort of analysis from Marcelo Clori and the Softbank guys when they talk about, sort of their new fund, and I know we'll have Andre talk to the group at the end of the day, but sort of talking about late stage capital, and that's sort of what the role that DST is playing, and you have Vostok doing late stage deals, obviously Softbank, major player, but there's Riverwood, there's General Atlantic. It's almost crowded at this point. So asking the panel, is there almost that's a benefit on one hand, but is it almost too much late stage capital from again looking at valuations, and then maybe we can talk a little bit about what your expectations are on exit relative to where we are today with increasing valuations at the later stage.
Want me to go first, or? Okay, I can go first, yeah. So, I think you can look at it slightly from a glass half full or glass half empty perspective. Here's the way I think about it. So using the same 1%, 6% math that I was talking about earlier, Latin America, last year VC investments of a little bit under $2 billion within a global market of about $200 billion. So once again, Latin America VC investments represent 1% of global VC investment, while the region represents about 6% of global market cap. So if you look at it very high level from a macro perspective, it does not really feel like there's too much capital going into Latin America right now. Now, of course, whatever is the amount of capital needs to be supported by individual companies, and their ability to absorb that capital and create value from that capital, and so on. And on behalf of DST, I can talk about the couple of late stage investments that we have made, Nubank and Rappi. And starting with Nubank, here's what is, from our perspective, very interesting about Nubank. This is a business which is where Brazil is absolutely the best place to start this business. There was this market which faced an oligopoly of offline financial institutions who did not really feel the need to make things more efficient, who did not really feel the need to reduce prices for consumers, and along came David and Nubank and looked at this as an opportunity. And a product like this could not necessarily have started in US because there are like a bunch of free credit cards already available, probably could not have started in India because credit card penetration is like too low. But Brazil was the perfect market for a product like Nubank to get started. And so that was our perspective on Nubank. On Rappi, once again, we see
a bunch of macro factors which make on-demand delivery a very attractive model in Brazil and rest of Latin America. Whether it is the hygiene index, which makes it more cost-effective to deliver products, whether it's high population density, which once again makes it more efficient, and high traffic density, which once again makes it a more attractive product for users. So very local/regional factors which created unique opportunities for large businesses to be built, and the capital need that came alongside that opportunity to build a large business.
Yeah. Perhaps I'll try to give a perspective from our portfolio from the trenches, if you will. I think it's definitely awesome news that we now have growth capital. In general, I think it's especially interesting that we have the ability for entrepreneurs to raise large rounds, because this was one of the last uncertainties around, I think, around the potential in the region it's going to sound ridiculous today, but it was a true discussion with LPs, people that invest in our funds. 5 years ago, 6 years ago, was are entrepreneurs in the Latin American region bold enough to build big companies? Because looks like when the company is worth $100 million, they sell it off. And our argument, not only our Redpoint, the whole ecosystem in Brazil, we were defending, no, that's not the problem. The problem is that these guys that build a company that's worth $100 million already, they cannot raise 30, 50 to keep growing. The capital is not there. And now we have that capital. It's a lot more than we had before. Frankly, I'm probably biased, but I don't think it's too much, by no means. We are not seeing late-stage investors beating each other to death in crazy valuations like we see here in the US, which would be a top-down view. But from the trenches, what I mentioned before is the great companies that we are helping fund in Brazil, they're not having an easy time raising. They are successfully raising, but it's not easy yet, and it might change. So I think part of that is we have a whole vintage of promising companies that were being created under the uncertainty about growth capital. So it was more like creating, picking on your explanation before, the demand side for capital was, built without really knowing how the supply was going to come, and it came, and it's great. The other thing I believe is a characteristic now, it's many players like DST, for example, and other global highest quality investors that are looking in Brazil. They are not dedicating, with the only exception I think of Softbank, they didn't dedicate earned market pool of capital for the region. So our companies are attracting investors like DST, TPG, and so on a global scale. So the very best companies in Brazil are disputing with the very, very, very best companies in India and China for that capital. As an ecosystem player, I truly believe that there are companies in Brazil that should be getting funded in C and D stages that are not yet. So after everybody that deserves is getting money, and valuations the deals are very much disputed or easier for the entrepreneurs, then I think we can start talking about too much capital. Honestly, I don't think we are nearly there yet.
I mean, just to complement, just to say a few points. We might, at first glance, we might have an impression that there is too much capital chasing few deals, but we have to look at this in the perspective of the pipeline, right? The companies that are, growing and will become targets for those late-stage funds in, 1, 2, or 3 years. There is a critical mass of companies that have, I would say, something between $10 to $50 million in, annualized recurring revenues that will become target for late-stage funds, in a short term. And I also look at this in the prism of how VC evolved in Brazil. We had a very hot period that lasted from 2010 to roughly 2014, where a lot of money was invested. And after that, we had a 2 or 3 year period of correction, right? So the GDP in Brazil in 2015 shrunk by 4%. After that, in 2016, 3.5%. And of course, I would say that some companies, it was a very hostile environment during those years. But of course, I would say that those companies, they invested in productivity, they become even more efficient. And now is the time for those companies to really flourish, right? And this is what we are seeing. I think that, across the board, we look at the portfolio of some of the largest funds. There is a pipeline of companies that will be ready for late stage investment in a short term. And of course, also hopefully to start to have more exits in the region too.
Sorry, if I can add something to it. So the other thing which Anderson, you briefly touched upon is now the founders have inspiration. So MercadoLibre, which used to be the eBay of Latin America, is the same size as eBay now. The market cap is the same. There are a lot more billion-dollar plus companies in Latin America now than what there were, forget about 10 years ago, even 3 years ago. So a young founder who's starting a company can look at those bigger companies for inspiration and believe that they have the opportunity to build something bigger. There is capital, there is inspiration, and what kind of they need to do is execute.
Sure, and again, kudos to Fabrizio in the room who's doing a fantastic job as a role model. Alexandre, turning it back to you for a moment from a corporate venturing perspective, and maybe you can talk about, is that evolving from your perspective in Brazil in terms of, local players, and then also if I can ask you to kind of address from a Qualcomm view, what is the view of Brazil and Latin America today from Qualcomm, given the influx of capital and exciting new growth companies?
Okay, just to mention for those who are not super familiar about corporate venture capital. Corporate venture capital is, the investment activity performed by companies, right? And usually you have two, rationales for that. One is this financial return, which is very similar to a VC. So the way that we look at deals is very similar to the way that a traditional VC looks at a deal. And also we have the strategic return, which is how the success of an investment will benefit the startup and also benefit our mother company, right, in a certain way. CVC is a very hot topic today. It's one of the key tools around digital transformation, right? So right now in US, just to give a perspective, roughly 1/3 of the transactions have a participation of a corporate, and roughly 25% of the invested capital comes from a corporation, right? So of course you have very large players, companies like Google, Qualcomm, Intel, Cisco, Verizon that are investing a lot in deals, and there are a few strategic reasons for that. Perhaps one of the most important ones is to have like a nice in years in the markets, right? So use those investments as market sensors. I would say that many companies are, they have a fear of being disrupted somehow, and doing minority investments is a way for those companies to, learn about a new product, a new technology, a new market. Eventually, you can invest in a company, perhaps having an eye on an acquisition in a few years down the road, etc. Talking specifically about Brazil, we see a lot of interest. We got asked, all the time about, our recipe to do strategic investments in the region, right? By other groups. Some of those, those initiatives are becoming more and more real, and we have more and more groups investing in the region, but I still think it's relatively small, right? It's still relatively small. On our perspective, I mean, as I mentioned, the key strategic objective for us when we do an investment, it's usually related to a few things. One is, as I mentioned, it's a market sensor activity, right? So it's to learn about a new market. We also invest sometimes to promote an ecosystem or technology. So just to give an example, so when we invested in 99 back in 2012, the penetration of smartphones was relatively small in Brazil. That was a way to somehow promote smartphone adoption in a certain category of users, right? So that's also part of the toolbox for our CVC, right? And also, I mean, so those are, important aspects. And perhaps the third one is ecosystem development, right? For specific ecosystems, I can give one example for us, which is Internet of Things, IoT, right? Doing strategic investments around that particular ecosystem in a way that you can accelerate the adoption of the technology becomes a very strategic initiative.
Great, thank you, Alexandre. So I wanted to pick up on something that Anderson, you kind of alluded to, which is, in Julie's discussion early on today, and even a lot of the tone of our discussion about so much new capital finding its way into Brazil. Anderson, you kind of touched upon, hey, there's still funding gaps, right? I mean, there's still, good Series B and C companies that aren't attracting the international growth investor. So, and quite frankly, from the early stage venture capital fund manager, it's still not easy talking US LPs to invest in an early stage Brazilian fund. So maybe if we can talk about areas in the market that still could use some more funding, quite frankly.
Yeah, I'm going to talk about growth because I'm sitting on Series A. If you talk to the angel guys, they're probably going to talk about the same thing about us. But if you have been in the market for a while, you see companies that could succeed and don't. But that's part of the game. It's very rare that you see a company that should not succeeding just because it got more capital. And the accident happens, they get more money and don't work. So I don't think just throwing money at projects will fix everything. But definitely there are a lot of projects that turn out great, and at a specific point in time, they almost went bust, oftentimes by months, like 2-3 months, because they almost didn't raise a round. And then when they do, they become a fantastic success. We see these day in, day out, in all stages. And I believe in Brazil we are right now still suffering from two things. One that I think it's stronger, and it's probably the next thing we should address as an ecosystem, which is great companies, or potentially great companies that don't access capital. If you read any book of a very successful US startup story, Starbucks and so on, oftentimes you're going to hear, I talked to 50 investors before I got my check, right? In Brazil, we're going to have like 10. And so statistically, these guys wouldn't be there. So this is part of the story that I think we should address. Companies that do not look great yet, but if they get funded, they would eventually do. Obviously, there is intrinsic risk that some of these rounds will turn nowhere, some will become great successes. So that's a feeling, looking at the portfolio that we build, the portfolio of our peers. I think more companies in Brazil should be raising early growth rounds than they do today. The other thing is the size of the rounds. There is definitely a loss in translation effect already. Well, what is a Series A in Brazil is now completely a Series C here. But there is a specific amount of capital necessary for an entrepreneur to have the power, the time, and the freedom to try things that will allow him to change the stage of the company. And I think we also are still suffering from that in Brazil. The size of the rounds, we have to adjust that a little bit. And I think it's much better than day and night compared to 10 years ago, much better than 5 years ago. Some rounds are getting maybe too big, but the average is still below, I think. But it's improving with the additional capital.
We should talk more often.
Definitely. I'll invite you for breakfast tomorrow. How about that?
Do you have a view on it?
Yeah, nothing, in particular. I mean, again, I feel the same, right? I think there is a very interesting opportunity for more capital. I think there are very good projects in Brazil, early stage projects that are still not funded, right? So again, if we look at the VC investment per capita in Brazil is still far below other markets. So I still believe there is space for new fund managers, new GPs trying to tackle specific verticals. So with the specialization, so I completely agree with Anderson.
Yeah, start new funds in the seed and Series B, just leave Series A alone.
Well, certainly with with Canary and Barn, there's a lot more activity at the seed level. I don't know if you would agree with me on that, Anderson. So that gap seems to be getting filled more, but there still doesn't seem to be a kind of a Series B, C fund out there, right? We have Saurabh at DST and that cohort that's willing to come in for the breakout companies, but those kind of good Series B, C companies that aren't quite there yet seem to be, that definitely seems to be a gap.
Yeah, looks like we are not, so no regulatory problem here, but there seems to be a fair amount of new funds, either new managers altogether or funds raising new funds dedicated to that space now, a fair amount, the $15, $20 million rounds. So these could change, in a year's time we could be talking differently. But to your point, for sure, until, and no exaggeration here, until 3 years ago, 2.5 to 3 years ago, we would track seed deals in Brazil. When we talk institutionally, we would, this is the number of deals in 2010, 12, 11, blah, blah, blah. LAFCA does a way better job at that we do. But my point here is, before we knew the deals as a fund manager, now we don't know the funds. There are seed funds that oftentimes come a deal in our pipeline and we look at the cap table. Who's this guy? Oh, this is a new seed fund operating in this specific hub in Brazil. So it's definitely a lot more capital in the super early.
Great. Well, I want to tee up the audience to think about questions. We're going to turn to you in a moment. We'll give Andre and Softbank a chance to respond to this question directly. But we're talking about this last week. We at the bank we held our Global Connect conference, which we geared for international VCs, and some in the room here were in attendance, and we were talking to one of the managing partners at Softbank, Deep, who the question was asked to him: Softbank, friend or foe? I mean, they bring a tremendous amount of capital to the table, which is again fantastic, and really have just been an accelerant to what's happened with Latin America in the last year. But asking you guys as investors, just in terms of that much capital and the ability to control the ecosystem in a way that, and they play by rules that are a little bit different from the way the traditional venture capital industry is operated. So, getting your perspective on sort of what's great about Softbank, and then kind of what do you worry about with Softbank a little bit, and we'll let Andre respond to that later.
No, I can have a first crack on that. This is, I think it's been in the news a lot, and a lot of media outlets trying to get different angles and not so great perspective to generate news. I'm going to be very blatant about my opinion here. I think it's great news for the ecosystem any way you cut it. It's different, definitely. It's different here in the Valley. So these guys are disrupting or trying to disrupt, depending on whether they succeed or not. Venture capital in many ways here. And I think it's fantastic that we are catching up with innovation in our industry in Brazil. So for me, as a venture investor in the early stage, I think it's great news short term, especially with the vintage of companies that we already have. It's going to make my life harder down the road. I have no doubt about it. The fact that they entered is a major endorsement for the region. The deals that they are doing are consolidating the returns for my fund, for funds of our peers slash competitors. And if turns as it looks like, the good news, and we have a very interesting vintage, guess what? There will be a lot of new, super qualified, smart people entering the fray in the region. So our life is going to get harder in one cycle, but I think this is great. That's that's how it's supposed to be.
Sorry, just to comment, I mean, we are partners in one deal, more to come. I mean, it's a super constructive relationship. I think the biggest difference, of course, is given the size that Softbank has. I mean, 5 billion for an ecosystem that last year, in terms of invested capital, was a $2 billion industry. Of course, it becomes like a market maker, right? So, in a certain sense, for particular ecosystems, SoftBank has the ability of choosing, perhaps the winner for that particular ecosystem, and of course, depending on the side of the fence you are, that can be great news or not, right? I mean, frankly speaking, right? But having said that, I mean, being a partner with them in a few transactions, I think the approach they have for the companies are very, very interesting, very, very unique. A very unique way to analyze opportunities as well. I think we are learning a lot out of that experience. So, and for the whole ecosystem, this is all good news, great news.
Sorry, from a sort of the picking the winner perspective, do you worry at DST if SoftBank funds a competitor with the amount of capital that they do, that becomes a very difficult obstacle to overcome?
I'll answer both of your questions. The first one that Anderson and Alexandre answered, and the second one. So the first one, the way I think about it is, it's really irrelevant whether a SoftBank being in any particular region is good or bad for us. I think that's really irrelevant. I think what is far more relevant is whether this will be good or bad for the companies and the founders. And at least from my perspective, and it applies not just to SoftBank, it applies to any other investor. And the most important thing is how that investor will behave with companies and founders. Will they be a supporter and an advisor to help the founders achieve their vision? Will they be there in good times? Will they be there in bad times? And I think the way to evaluate any investor is really the same. I mean, that's the way I would want us to be evaluated. I'm pretty sure that's the way you would want yourself to be evaluated. And I think that's the way SoftBank should be evaluated as well. So that's how I think about them being present in the region. Now, your question about capital and whether that can influence the outcome, the ultimate outcome in any particular sub-industry. I think it can have some influence, but I really believe far bigger influence is going to be execution from the team. As Anderson said, there have been multiple instances where companies could not succeed because of lack of capital, but I really don't think there is any instance where companies succeeded just because they had capital. So on the margins, somebody like us or Softbank, or again any investor for that matter, can probably have some influence, but the real factor which will determine success is the execution. And really, I think what I see as our job is guiding the founders, helping and founders and the team, and helping them really execute to their maximum potential.
Well said. I think execution, I don't think anybody would disagree with that. So turning to the audience for questions. Who has a question for the panel? We have a couple. Why don't we go up in that direction? So the gentleman who's waving two hands.
No? Can you hear me now? And if you mispronounce my name, then it would be three hands. Hans, Brasileiro gringo with a little bit of European, has been involved with Margarita in this group for a little while. We're talking a little bit about kind of a macro view, unicorns and so on, and investment on later stages. I'd like to see kind of maybe your characterization of the competitiveness of the so-called Brazilian unicorns to go cross-border. Obviously, U.S. companies getting a lot of money, they go cross-border. So at some point they start colliding, and the question is, who buys whom, or how does this all turn out? So I was curious about a characterization. As these unicorns keep growing up and getting bigger, the numbers grow, how do they collide, or what happens? What do you guys think?
Yeah, I'll throw some examples or data point here. Obviously biased, I'm going to pick on our portfolio, but I think a great example of the potential of Brazilian companies is Gympass, one of the unicorns. They came up with a model that is innovative in Brazil. They won the market in Brazil relatively fast, not easy, but fast. Cesar has a superb degree of execution, and the business model was novel. He grew from Brazil to Europe, won many of those markets, is now playing in the US. So I think this is an example that, it's not colliding or disputing, it's really setting a new benchmark of Brazilian companies, or Latin American companies, I should say, that we have other examples of that as well in the region. The other one is, if you want an example from quality, I think we have many examples as well. They're here and let you complement later, because it's not an investment from our fund, but from our partner fund here. Redpoint is an investor in Nubank, and Nubank was not considered the best neobank in Brazil. It was elected the best neobank in the world. So they are definitely doing something right in the region, and it's Colombian founder with a Brazilian co-founder, starting with a US co-founder as well, starting a business primarily and still at least in Brazil. I think it's another great example. And we have others like Resultados Digitais, who is also from our portfolio as a disclosure. They just raised the largest SaaS round in Brazil. They have a competitor in the US. Clearly, they are the best in the same field globally. In all the other, developed or emerging markets, they are by far the best in execution. So I think there are more and more examples that demonstrate, not hint, demonstrates that the quality of the companies and the boldness of our founders are up to global fight. Are all the founders in Brazil win all the games? Not. There will be cases in which it just makes economic sense to join a bigger network or a company that started faster. And frankly, I think that's good too. It should be happening faster. Both things, Brazilian companies winning globally, but also Brazilian companies being built and dominating the region and being part of a global play in a relevant way as well.
Yeah, to maybe add to this, there is no law of nature which says that global companies need to emerge from a specific region. Companies started in Brazil have as much of an opportunity to be global market leaders as companies that emerge from Silicon Valley. And increasingly we are seeing this in multiple geographies and their ability to create like global market leaders. And as Anderson said, Gympass is a really good example of that from Brazil. 10 years ago, we used to talk about China being a place where US business models were being copied, but now there are companies like Xiaomi and there are companies like ByteDance / Toutiao, which are innovations from China and are in global leadership positions. Same thing with India. There is this company called Oyo, which is not a portfolio company, but innovated with a new business model in India and is now the global market leader in this particular business model. So I think it's really about ambition of the founders. I think it's really about the ability of the team to execute fast and execute better than any of their global peers. I think they really have the same opportunity as anybody else, anywhere else in the world.
Yeah, my view is very similar, right? I mean, when it comes to this particular topic, I think the good and the bad news is the same, right? Brazil is a continent by itself. So many times, I mean, you can build a large company with large revenues only focusing on Brazil. But I think that over time we are learning more and more with our brothers from Argentina, right? Perhaps one of the most hostile environments in the world for business. Multiple crises in the last 20 years, to say the least. And even in that environment, you have companies like Globant, like MercadoLibre, that really became global companies with market caps above $10 billion in some cases, right? So I see that more and more. I mean, there is nothing by definition that should confine a company that is born in Brazil to be confined to our region. And I think that the new technology models, cloud computing, those business innovations, they will allow those companies to become more and more global, perhaps in a more natural way.
And we're not even counting companies like Pipefy or Veronix's investment in Brex, right? Next question.
Hi, I'm Rafael. I am the founder of Tutor Mundi. And it seems now that we have the full cycle in Brazil, right? We have angels, we have seed, Series A investment. We now have people putting $100 million. We even have people who sold unicorns and now are becoming advisors for all the ecosystem, right? So my question is, in your view, because now we are prepared to compete globally, you guys will raise the bar in terms of finding the entrepreneurs, because now you have a more clearly path to create someone who will be able to get there? Or no, do you believe that you guys will lower the bar because now there's more money, there's more cycle, and you know what, let's take more risks, and maybe the market will be open to more, less experienced entrepreneurs? So what is your view on this? And if I just could ask a little favor from you guys, if you could recommend any entrepreneur that you really admire. We talk a little bit about execution here. If each one of you could name an entrepreneur that you really want to see more of this guy. Hey, you know what, this guy, I would love to find another guy like him, because of his excellent execution. Just to learn from him. Thank you.
who wants to take that? Have you changed your approach to entrepreneurs given the evolution of the ecosystem?
Yeah, I don't think that's gonna change. I think the bar will be always as high as we can, given the market that we are at. To objectively answer your question, I think if between the two scenarios that you described, I think with more capital, the natural effect will be for the bar to lower a little bit. I don't think that's bad. I think that's going to be great for the ecosystem. As I mentioned, some entrepreneurs in the US, they pitch to a whole lot of investors before getting funded. And the reason for that is not because they found someone stupid to give them money. There are different investors for different types of startups. And I think having more investors in the region will allow great entrepreneurs pursuing different projects, types of projects, business models, industries, to get funded as well. But to give you a metric, we currently, on the Series A, we are looking roughly at 250 companies for every one investment we do. In the US, historically, before this boom in new funds here, the average was 1 to every 100 historically. So it's definitely statistically, if you believe in that religion, the bar is higher in Brazil today than in Silicon Valley. Based on that only statistic. I'm sure we are declining a lot of opportunities that should be funded by someone. Our role is to build a fantastic portfolio and invest in entrepreneurs that we like, respect, and admire and want to be working with for 10 years and that we believe we can help. So we don't have, it's not our duty to invest in everyone that is great, and feels really bad to know that some of those guys are not getting funded because the market is not developed yet. But our industry, our fiduciary duty, as my partner Manuel says, it's about the deals we do, right? We have to focus on what we can help and what we can produce. In terms of great entrepreneurs, I think there are really, really great people. I won't go as far as naming anyone outside of this room. If you want to talk to great people here, I'll talk about those from my portfolio that I know really well. I can tell you, Eric Santos from Resultados Digitais is here. Marco from VSafe is here. Rodrigo Salvador from Bacei Direto is here. I bet you, if you talk to them and exchange ideas with them, you're going to learn a lot. I learn a lot every time I talk to one of them. So it's, guys building fantastic companies in any geography, in our case here, Brazil and Latin America. I think they are special people by nature, and it's always really hard to name one that you admire the most. Specifically in terms of execution, I think Eric Santos in the SaaS space, I'm fully biased, but I think it's the best run company in Latin America for the SaaS business today. But everyone that I mentioned here will tell you something special, I'm sure.
Well, for the sake of time, we'll take the great answer. Anderson will take one last question. I'll add to the list of all the great entrepreneurs in the room. Our very own Fred Aslan is a terrific CEO as well. So last question.
Social Capital Shalapatia here in Silicon Valley says 40% of venture funds go to Facebook, Amazon, and Google to acquire customers or for infrastructure. It's kind of like a Ponzi scheme where the big fish eats the little fish. Wonder if what's being done with the ecosystems in Brazil to prevent a winner-take-all kind of ecosystem.
So your question is more around to prevent that from the infrastructure standpoint?
Customer acquisition and infrastructure.
Well, infrastructure is, hard, very hard to say, but this is a scale business for sure, right? So, I'm sure there is space for specialized cloud service providers, for specific infrastructure needs, right? But it's very, very hard to compete against AWS, right? If your question is more around infrastructure, it's hard to. I'm trying to give you a different flavor on that, but that's really my belief. This is what we're seeing here. So just to give you some numbers, AWS controls more than 50% of the market for cloud-based infrastructure, and Azure controls close to 20%. So those two guys are 70% already.
Yeah, I think Shamat's point is fair. We get that from our LPs. Imagine the situation some of our investors are. They invest in our fund and give us money to fund startups, and then they invest in another fund to do the same. And I back one competitor, and these colleagues/competitor of mine back someone else. So then they go to Google to compete for the clicks. So it's like for the VC investor, the LP, they're bidding against themselves indirectly, right? So this happens all the time. I don't think it's a problem per se. I think it's the nature of the business model of Google and Facebook. Google came up with it first. Facebook successfully copied it. And it's an auction business, so it's brilliant for the companies, and it's an effective channel to acquire customers everywhere. It's not the only one. I think especially in Brazil, I can't really say by expertise, but I would guess in many other places in Latin America, there is a ton of opportunity to acquire clients still today. Well, first of all, the bids are not as expensive. If you take the cost of the word insurance in Brazil and elsewhere, it's still ways to go, but we will get there eventually. But there is a lot of opportunity to acquire customers through inbound marketing. And if I say resultados digitais again here today, Eric's gonna have to pay my dinner. But that's one example of things you can do. But pure SEO you can do as well. Channels. There are a lot of offline, the traditional old incumbent, whatever you want to call it, old style businesses that have distribution networks that are going to die if nothing happens. So you can digitalize those channels successfully for great acquisition as well. And a lot of entrepreneurs in Brazil are doing absolutely everything I just mentioned. So I think it's a natural fight to fight. And I think it's probably easier or more efficient in emerging markets in general, but I'm guessing here for sure in Brazil and Latin America. I don't know if I answered your question, but I tried.
And maybe just to add to it, market forces should take care of monopolies essentially. And if somebody really believes that the world is in a worse place because of concentration or monopoly, there is always the opportunity to challenge the monopoly. So as long as Facebook or Google or Amazon will be like the best service provider, they will continue to gain market share. But ultimately, Microsoft will come along and start something like Azure if they believe there is an opportunity to benefit from this by fragmenting this monopoly.
Well, thank you for the great questions. We're going to wrap up. Special thanks to Anderson for switching roles and carving me into this panel. And please join me in thanking our terrific panelists.